The broadcast is now starting. All attendees are in listen-only mode.
Okay. Good afternoon, everyone. Today is Thursday, February 14th, and this is another hour-long session with of CFRN Thursday, where we go over the trade setup in the CFRN trade room in slow motion. Okay. I'm featuring the DT Pro demo platform. That is the same platform that both Dwayne and Michael use inside the training room. Okay. Before we get started, the few things that I need to go over are the disclaimers. So before I present anything, I have to go over a few things. So I thought I would open up the room early, knock that out, and then that would give us the full hour to kind of jump feet first into the market and put some trades on, take them off, and manage them. So I'm going to do that. Not only I'll go over the disclaimers, but then what I'm going to do is go over the trade setup. Okay. And hold on. Let me delete that. I'm going to go over the trade setup. Okay. So for you guys that are brand spanking new, you're on your first day or two on the trial, this will be a good syllabus for you to lean on. I'm going to go over the setup, some of the buzzwords, some of the things that you'll hear in the training room. So when you do go in the training room, you'll get familiar with you'll be able to absorb what's going on a little bit better, I think. Okay. So for the new guys, this, like I said, will be a great syllabus for you to lean on. Okay. After I'm done going through the trade setup, then we'll jump inside the platform in a live environment, and we'll look for that same setup, but in a live market. Okay. So we're going to go over the same markets that Michael does in the morning. I'm going to make some observations. I'm going to pull out some things that some traps that people kind of fall into when they start looking at things. So if you are a returning CFRN member, this is going to give you some valuable screen time. You'll get a chance to ask me questions, learn the personality of the markets that we're trading. Again, if you are stubbing your toe, maybe some of the stumbling blocks that other people are going through, as I pull them out and share them, maybe those will be the things that kind of tip the scale in your favor and keep you out of the traps. Okay. So the ideal is, again, give you an eyes wide open approach if you're brand new. And those that are returning CFRN members, this will be a good chance for you to get some more training. Okay. So with that being said, I'm going to go over the disclaimers. And again, I don't really like to throw them up and put them back under the blanket and tell you to take a look at them. I'll take a few minutes to go over them. That's why I opened the room early. The disclaimer, in a nutshell, meant really to scare the brand new guys that are being introduced to our space, which is trading futures. Okay. And trading futures is a leverage game, and therefore you can lose everything and some in your trading account if you're not using stop losses, if you don't have a trading plan, if you turn your back away from the market, if you're not engaged in what the market's doing, if you're not watching over your trading account, if you're not, if you don't know what the news items are that could affect your positions, if you ignore all those things that I just went over, this disclaimer is going to hit you right smack dab in the face. Okay. I've been doing this for over close to 25 years, and I really have seen the good, the bad, and the ugly when it comes to trading. Okay. So when I tell you this disclaimer can hit you right in the face, I've seen it. Okay. So it is important, okay, to use stop losses, have a plan, be engaged in what's going on, watching your trading account. Okay. It's a job. Okay. It's a full-time job that you really have to take serious because this is a leveraged space. Okay. And the funds that are in your trading account should be funds, should be risk capital. It could be funds that you can afford to lose, that won't change your lifestyle. Okay. Those are kind of the nuts and bolts of the disclaimer. Okay. The good thing with CFRN, and that, well, I'll go over in a few minutes, you are going to have a trading plan, right? We have a set of rules. There's basically four set of rules. Okay, you are using stop losses, right? Every trade has an 8-tick stop attached to it. You're also on a 4-tick range chart, right? So you really have to be engaged in what the market's doing, the price action, and what the oscillator's doing, or the slingshot, right? So you really need to be glued in front of the screen, engage in what the market's doing. CFRN preaches being in the simulator until you're consistent. They also talk about not trading around news items, news reports. So at least if you're thinking about going down the CFRN path, this disclaimer that I'm kind of putting in front of your face is scaring you. Okay, at least if you go down this path, that'll water it down a little bit. Okay. In the end, however, okay, and this is the worst case scenario, if you do all the right things, you're in front of the screens, you're watching your account, you're using stop losses, you're not trading around reports, you're doing all the things that you're supposed to, okay? And if something goofy comes out, something gets announced, something's tweeted, something, whatever the case might be, all right? There is the potential for your stop to get jumped, okay? What means is you have a stop loss in, the market does something absolutely crazy, and your stop is not elected. Okay, that is the worst case scenario. I've probably seen it once or twice. And what that means is you're basically in the market still without any protection, and you have unlimited risk at that time. The plus side of that is this. At least you'll be in front of the market. You'll be in front of a platform. And if all hell breaks loose, you have this hotkey here. This is the tower. This is the depth of the market that we're buying and selling from. And if, like I said, your escape route is this hotkey, which is exit at market and cancel. That gets you out of the trade and cancels any outstanding orders you have working in that particular market. Okay? So that is the long-winded explanation of that disclaimer. Okay? It's got to be taken seriously. That's why I don't throw it up there and then, tell you to take a few minutes and then throw it back down. Second disclaimer is my relationship with CFRN. Okay? In a nutshell, CFRN, they're the educator. It's their trading tools. It's their indicator package. Okay? They're the third party. Okay? Their indicator set is built inside our platform. Our platform is called DT Pro. What you're seeing in front of you is the CFRN indicator set. Okay? You'll download this on your trial. Okay? They encourage that, and you should do it. If you're going to take a test drive of it, you should get your hands dirty and download the platform, download the indicators, and raise it and ask questions. Okay? My role in this, I support the platform, the indicators inside the platform. If you have troubles downloading the platform and getting indicators running, you're going to call me at the trade desk. I support brokerage, the trade, the execution part of it. Okay. If you say, hey, I want to be a CFRN member, this is what I want to do, then any money that changes hands is going to be between you and CFRN directly. Okay. Anything on their website, like the training videos, the members areas, Thursday night workshops, Logic 247 with the Telegram, the concierge trade alerts, the daily doubles, all that other stuff, you'll coordinate or talk to CFRN directly about that. Okay. Valerie is a good asset. She was just added to the team. I know she's answering the support emails. So if Dwayne is on the radio and Mike's running around doing some other things or mentoring stuff, I know she's there to pick up the line and answer any questions. Of course, you guys can always call me at the trade desk. I'm in the room every single day, so I know the trade setup. Okay, I've been doing it for 8. Michael and I were funny. The thing is, Michael and I were talking about it today in the room, and I think I've been in the room for almost 10 years now. That's how long it's been. So I know the setup. I could teach the setup. Guys will reach out to me when they have questions and comments and stuff like that, which is fair game. I want you to feel free to do that, okay? Because if you can't get a hold of them, you guys know you can always get a hold of me at the trade desk, okay? That is the other reason why we did the CFRN Thursday bit, is because there was a lot of hand raises. A lot of guys said, look, we need to slow this thing down. I need help. Can someone help me? And so I raised my hand and said, you know what, I'll do it. And obviously there's a mutual benefit, right? If you do well, I do well. And, if there's something that I can say or do different, or, however I can, explain things, it might be a little bit different than Michael. That gets you over the hump, then hey, that's great. That's good for everybody. Okay. So again, that is my relationship with CFRN. I don't work for them. They don't work for me. Okay. There is a line in between us. Okay. And that's what we're disclosing. Okay. We have to talk about it. It's a compliance thing. All right. That takes care of that. It's almost 1:00, which is cool because then I'll get some time to really look at what's going on in the marketplace. But the second part of the presentation, like I said, is we're gonna cut up what the trade setup is, and this is the traditional slingshot setup. It's been around from day one. There's other setups that have been created. There's a webinar every Tuesday afternoon that Michael does to go over those other trade setups, but I always gravitate toward this one because it's been around from day one. Okay, nothing's changed. Nothing's been form fitted. Nothing's been tweaked. It's the same. If you notice this screenshot, this is a chart that I think Michael took a copy of back in 2012. So, things haven't changed. Okay. So again, guys, along the way, especially if you're new, I encourage you to ask questions. I have the questions box open, and if I skip over it, I apologize. The other thing too is my phone might be buzzing. If it starts ringing, I might have to put you on hold and hit the mute button. So I just want to give you guys some advance warning. Okay? All right. First order of business is the time frame. We are on a 4-tick range chart. Okay? So if you have DT Pro, how do you get there, right? Chances are you might be on a 5-minute chart. You might be on an hourly chart. You might be on a daily chart. Okay? But the bottom line is, if you want to get to the 4-tick range, see where it says daily here in the upper left-hand corner of the chart? There's a drop-down box there. Just left click on it and select custom. Box opens up, hits range bar, and make that one look like a 4. Just hit OK. Okay. This is the ES. Okay. March S&P mini contract on a 4-tick range chart. This is how it should look. Okay. First trap that people fall into, they go down to custom, select tick bar, make that 2 look like a 4, and then they hit OK, and it looks goofy. It looks something like this. All right. So if you're staring at something like this, you know you fell into the first trap. Go to the range bar. It's got an R in parentheses, and it should be smoothed out. Okay. The height of each candle is 4 ticks in height. Okay. That's why it's being used. The other reason why is that in the training room, you're going to hear Michael start calling out the highs and the lows. Okay? It's going to start calling out the highs and the lows. And the fact that we're on a 4-tick range chart, he could then be proactive, a little bit predictive on placing orders ahead of time. Okay. So what that means is, okay, when he's calling out the highs and lows, he's preparing to buy the market on a stop, which is above the current market price. Okay, that would be the last price here. Or he's getting ready to sell it below the current market price. All right. So if the market does shoot up and qualify, he's going to be long with the momentum. If it breaks down and he's got a sell setup, short setup, he's going to be getting short on some weakness. Okay. And everything again is going to be done or executed on this depth of market or this tower. Okay. That's what he's doing. Okay. And that's one of the reasons why we're on a 4-tick range chart, because he knows the height of each candle is going to be 4 ticks in height. If that happens in the next hour, I'm going to show you how to place that type of order. Okay, so we're going to be buying it on a stop, or we'll be selling it on the stop. Okay, we're going to be entering the market that way. Okay. So again, the time frame is a 4-tick range chart. Okay. Again, back to our diagram here, and we're going to work on the top portion of the chart here. Okay. So here's some buzzwords. The red and blue line is referred to as EMA1. Okay. The green line is referred to as the BBC. That is short for bullish or bearish cross, because when you combine the two, that makes up step number 1, which is this. When the MA1 crosses the BBC, as it does there, as it does there, and as it does there, that MA1 is that red and blue line. As it crosses the green line, that is the cross. That kind of lights the match to the setup. Okay, that is step number 1. Okay, if the MA1 is red, you're looking for shorting opportunities. If the MA1 is blue, you're looking for buying opportunities. Okay, the one that's highlighted here is a bearish cross. Why? Because that MA1 is red. Okay, so at that point, we're looking for shorting opportunities. Okay, we're looking to get short the market. Okay, now note that I didn't say go long, go short, go long. I just said we're looking for shorting opportunities, because what that's going to do is it's going to lead us into step number 2. Okay, and step number 2 is this. After this cross here, okay, this bearish cross highlighted by the red arrow, what we expect to happen, what the normal thing for the market to do, is to gravitate toward the BBC or that green line. That's what we're looking out for. And not only are we looking out for that challenge of that green line, after it touches it, as it does there in this green candle here, we're looking for the close in the direction of the trend. That is the one that's highlighted here with the red arrow and red candle. We're looking for that, because that is step number 2. Okay, so we're looking for the normal thing, the market to gravitate toward the BBC, touch it, and then close in the direction of the trend. Okay, that's what we're looking for. Okay, now in some cases, and I'm going to go over it this afternoon, the market is going to have so much bullish or bearish momentum, it won't be able to get to the BBC. So what I'm going to pound into you guys is getting in the habit of drawing a trend line. You're going to see Michael do it all morning. You're going to see me do it this afternoon. So you need to program yourself to do it, to draw trend lines. And if you have a question about how to do it, then we need to have a conversation about it, because that's a big part of this. All right. So you need to get in the habit of drawing a trend line. But the bottom line is we're looking for this step number 2. Okay. Notice the MA1 being red. We're looking for a red candle. Okay. Ideally, we want everything to be the same color. Okay. We want to connect the dots. Okay, there needs to be a common denominator. If you want to stack all the probabilities in your corner with this setup, ideally you want everything to be the same color. All right. So once number 1 is activated and number 2 is identified, our eyes now gravitate toward the oscillator portion of the chart, which is called the slingshot. Okay. And in the slingshot, basically, this is where the trade exists. Okay. It all happens down here. Okay. So here's some buzzwords down in the slingshot. The blue and red line is referred to as the cycle. Okay. The green line is referred to as simply the green line. There's no special word for it, no special name for it, just the green line. But this is why it's important. Okay. What this is saying is this. This cycle being red, pointing down, is telling us we are in a bear market on this time frame. We are expecting prices to go down with the cycle. Okay? This price action up here, okay, with the green line pulling away like it's doing, okay, what that is suggesting, okay, the market's doing the normal thing, right? Pull back to the BBC and we get the down close. What it's suggesting there is with that price action up here combined with the slingshot, that this is just an air pocket in this ongoing downtrend. That's what it's suggesting. Okay? And when step 2 is present, combined with the separation, okay, you're going to hear that word in the training room, separation or divergence. Okay, this space in between here is the separation. It's implying, okay, this is an air pocket in this ongoing downtrend, and it needs to be sold or some action needs to be taken. Okay? When that's present, what you're going to end up doing is going inside the DOM. Okay, the DOM is this tower here. Okay, that's the DOM. That's where we buy and sell. Okay. Well, all we'll do is go in and left click and take action. That would be the game plan when that's present. Okay. So when step one lights the match, the MA1 is red. We look for the normal thing to happen after that, which is the market gravitates toward the green line, but more importantly, we're looking for a down close. And with a red cycle, notice everything is red. We have a common denominator, right? And with the green line pulling away, creating this space or the divergence you'll hear inside the training room, we're going to get short. Okay, we're going to take action. In the end, here's what we expect to happen. Okay? Because your next question is usually, well, when do we get out of the trade? And here's the answer to that. The normal thing for the market to do is for the green line to start gravitating toward the cycle and closing a gap. And when it does, what we expect to happen up above here is price to make a new pivot low. And when that happens, it's at this point we're getting out of Dodge. We're cutting the trade loose. Because what we expect to happen, the green line pulls away, goes into the cycle, pulls away, goes into the cycle, pulls away, goes into the cycle until that cycle now is not red, it's blue, suggesting now we're in a bull market, and then the green line is below it and creating bullish separation or bullish divergence. And you expect this to keep going on over and over and over. Okay? And in the end, you're selling this top, selling this top, selling this top, or you're buying this dip, or you're buying this dip. As long as we are trending. We are going to talk about trending this afternoon, as long as we're trending. All right, here's my first phone call, so stand by. All right, I'm back. So in a sense, as long as we're trending, we're going to be buying those rallies or buying those dips, okay? As long as we're making higher highs or lower lows. And I'm going to pound that point pretty hard this afternoon, okay? So the trade exists down in the slingshot, okay? Now, if you're going down the CFRN path, this is your day one, you're not learning to pick the top here and learn to pick the bottom here and trade from point A to point Z. You're learning to take a piece out of the middle, okay? And along the way, we're going to teach you how to trail the stop, trail the stop, trail the stop until, guess what? That green line eventually gets into the cycle and closes the gap, okay? And remember, every trade has an 8-tick stop attached to it. Okay, so if I'm brand new, if I'm trading gold and crude, because Michael does, and crude's a pretty hot market right now, you're risking $80 a contract if you're dead wrong. If you're trading the S&P or maybe the soybeans, you're looking at closer to $100. If you're looking at the mini Dow, it's closer to $40. Okay, so that's what you're signing up for. Okay, you're also signing up for scalping. Okay, because we're looking at the market under a microscope, right? We're on a 4-tick range chart. This is rules-based. Okay, so you're going to have to, practice some discipline and follow the rules. You're going to have to learn to navigate a platform. Okay, that does take time. Okay, and you'll have to be engaged. You'll have to be in front of the screens. Okay, you'll have to be engaged in the markets. Okay, it's all a learning process. Okay, that's why we'll give you the demo to practice on. Okay, CFRN will tell you to practice first, which is a good thing. And I know it's not real money, it's not the real thing, but the practice of identifying the setups and moving that mouse into the DOM and actually pushing a button and executing the trade and trailing the stop, the execution part is a big deal. Okay, emotionally, when it's not real money, it's not. Okay, but you have to be consistent, build some confidence, and you better know how to push a button on the platform. It'll cost you money. All right, so those things are important. Okay, so that's what you're signing up for when you go down the CFRN path. Okay, so again, the whole idea is to give you an eyes wide open approach of what to expect, give you some guidance on the setup. Okay, so now what we're going to do is we're going to look for this setup in a live market. Okay, so I'm going to make some points, make some observations. Hopefully there's enough things going on where I can push some buttons, get into some trades, show you how to get into a trade, how to manage a trade, when to get out, all that good stuff, so you guys have a real good idea what the heck's going on. Okay, so let's do it. All right, again, ask questions along the way and we'll see what's going on. First thing, okay, everybody knows what I'm going to say, or most of you guys. The number one thing the market needs to be doing before we push any buttons, the market needs to be trending. It needs to be making higher highs. So here's habit number one you should be getting used to doing, is hitting this zoom out button right here with this right magnifying glass. because inside the training room, okay, Mike's going to have his setup. He's going to have his charts up, okay? And sometimes it gets blown up here a little bit, where if you see this bullish cross here, okay, if you see the setup, you might say, hey, we're trending. We're making higher highs, and there's a pullback to the BBC, and it has all the components to get long. Habit number one is I want you to zoom out. 3 or 4 clicks, okay? And if you do that, you'll see a larger landscape of the market. And if you take a real close look at this, we're not trending, okay? This might look like we are, but this isn't, all right? So I want you to get in the habit of hitting that zoom out button, okay? That might make the difference of a good trader, avoiding a bad trade in a nutshell, okay? Now, if you're unsure about whether we're trending or not, one clue really is to look at the dynamic support and resistance dots, okay? When they're side by side like this, okay, that is a clue we are not trending, okay? That is a real good clue. Notice how they're side by side here, okay? So if you're unsure, look at your dynamic support and resistance, and that's a good starting point, okay? The other thing, too, is if you're unsure, don't push a button at all. Should be easy and obvious, right? Don't push a button at all, okay? It should be really easy, okay, the trending action. All right. So we identified that the S&P mini is not trending, so we're going to move on to crude oil. I don't know why I have this one in there, but let me add the crude. Okay, I'm looking at the March crude. Notice the first thing I do is I zoom out. Okay? Okay, so we're making some lower lows. Okay? As I said earlier, just to go over kind of what happened earlier here with the trade setup. Okay, first of all, we identify as if we're trending, if we're making higher highs or lower lows. Number two, after the cross, it's a bearish cross because the MA1 is red. The normal thing for the market to do is to gravitate toward the BBC. The BBC is this green line. You're looking for the touch and the close against the BBC. By the way, that candle is a touch and close, and it's called a gravestone doji. Okay, so that does qualify. All right. The other habit I want you to get into is if after you identified that we're trending, that we're making higher highs or lower lows, and we have this cross, okay, the next order of business is to gravitate toward this trend line. I want you to activate it. It's right here. Left click. Okay? Because as I said earlier, the one thing you want to do, if you want to get in the habit of drawing trend lines as the market, okay, gravitates toward that BBC. 2 reasons. Number one, if it has so much bullish or bearish momentum, it won't get to the BBC and it'll fail. Okay? That's number one. And if it does fail and everything qualifies in the slingshot, separation or divergence, you're going to, again, go inside the DOM and take action. The other reason why you do that, because at some point, this cycle, because we want this to be red if we're looking for bearish activity, right? At some point, after drawing the trend line, this starts turning blue on you. This trend line is required. You have to draw it. And in addition to that, we need to close below it, okay, before we can take action. All right? So if you get in the habit of drawing the trend line in advance, and this sucker here cycle turns color on you, okay, you're not fumbling around trying to activate a trend line and get it drawn. If it happens and we got the separation, again, you're in a position to go inside the DOM and just left click. Okay, get long or short. All right, so that's another habit to get into. Activate the trend line after the cross. So we talked about two of them. Okay, hitting the zoom out button, which is this button here, to identify whether we're trending or not, but also activating this trend line button after the cross. Those are two good habits to get into. Okay. All right. So for the moment, what's crude doing? What's it telling us? Before we can take action on crude, we have a double bottom here. Okay. The crude has to make a lower low before we can get short again. All right. So we're going to skip it. Move on to the next piece. So we're going to go to natural gas. We're going to talk about natural gas because, well, on Thursdays we get an AGA report, and I know that's going to kick the market around in the natural gas. Okay? All right. So stand by. We're going to talk about, is this market trending? So 1 second, my phone's buzzing. All right. Is the natural gas trending? Okay. Notice the first thing I do, zoom out, zoom out. Okay. First thing I see here, guys, is this low. I see this low. Wait a minute. We closed underneath the low. Okay. Be careful with that. Okay. That's another observation to take away from this. Okay. I know you might get crazy and see this low here broken, but look at how we came right back next to support dots. It's got to be easy and obvious, okay? That's support, and to me, this is support, okay? So for the moment, okay, I like the fact that this is bearish, the cycle is red, and the green line is pulling away, so it's got some good components to it. But what I'd like to see in the natural gas before I get short is it to spend some time underneath this low, okay? So natural gas is off the table. Why? Because it's not trending. Okay, so get rid of that. Let's move on to the gold. The gold, we're in April gold. Okay, and for the moment, okay, hitting the zoom out button, it looks like it was already zoomed out. Okay, we're not trending. Okay, we're just kind of trashing around back and forth. Okay, so the gold has support here. Had a little bit of support here too. We had a pretty positive reaction off that level. And notice how we're finding support at just roughly the same area. Okay, so for gold, it's going to have to punch out new highs, or it's going to have to punch out new lows before I would get excited about trading the gold. All right, let me make a point here. Okay, here's an area of chop. Okay, sideways action back and forth. Okay, again, wait for it to take out that congestion area. Be patient. Okay, let it take out that sideways action. Okay, before you take action. One clue is if you get some dynamic support and resistance and we start spending time above it or below it, that's a clue. Oh, maybe we've just broke out of this congestion and now we're starting to trend. Okay, so be patient. It's got to really hit you in the face. All right. Notice too, the one thing I talked about earlier is getting in the habit of drawing trend lines. Okay. Here's the bullish cross. The MA1 is blue. Okay. We broke out of the congestion. We're starting to pull back to the BBC. Okay. Get in the habit of drawing trend lines. Okay. Because here's an example where the market had so much bullish momentum. Okay. It couldn't get to the BBC. And with the close above, it ignited a long position. Okay. Did it give you a big winner? No, probably resulted in a break even. But the bottom line is it had a lot of the components. Okay. All right, 1 second. I need to take this line. All right, hang in there, guys. I'm almost done. I haven't gone anywhere.